Hello and welcome to the No Flipping Excuses Show, the only podcast in real estate investing that teaches what you need to know to find and flip deals right now. Wow. Break free the chains that are holding you back and join us on this episode with Jason Lucchesi.
Hey, what's going on? It's Jason Lucchesi from the No Flipping Excuses Show. I hope you guys are doing great because I am doing great. We've got a phenomenal guest here with us today from the team. We are going to be talking about notes on this show. And the main reason why is it's virtually untapped. And it's such an awesome time to be getting into notes. If you didn't catch our episode that we've been talking about, the last two has been with Mike and I, and we've been talking about asset managers and getting in with banks and credit unions and hedge funds and some of the other really awesome stuff that we've been discussing. Well, we've been talking about the bulk REO side on the last two podcasts, but what if you get these packages and they've got notes on them and you're like, well, what do I do with these notes? Well, that's why we've got Larry and Mariska joining us from the team. They're going to be at our event that's coming up here at the end of July, and we're going to be talking about notes on this episode because it's so key and vital right now to be talking about notes because of how the market's shifting, how it's correcting. There's going to be a lot more availability, and a lot of people sometimes get not confused, but they get a little fearful and they're like, I don't know notes, so I'm not going to do them. So without further ado, Larry, Mariska, how's it going?
We're doing great, Jason. Thanks so much for having us on. We're super excited to be here.
Yes, thank you, Jason. This is awesome.
Yeah, absolutely. No, I'm so happy that you guys are here. Obviously, we're all part of the team here, and we're already putting together something amazing for the end of July. It's really going to be something that a lot of folks have never seen before, and giving some amazing content away. And we want to introduce people to you guys, folks that are going to be attending. You know, we want you guys to know Larry and Mariska are going to be there. They're going to be presenting some amazing information. But for folks that don't know you guys, why don't you tell our audience, our subscribers, a little bit more about you guys?
Well, we're a husband and wife team. We live in the Seattle area, and we love notes. And one of the reasons we love notes is because it's truly a virtual business. You can do notes from anywhere. It's a great way to have passive income. It's a great way to grow your retirement. And if you think about it, every real estate transaction, unless you have the cash to just pay cash, but real estate transactions involve notes. Yep. So why not become the bank? Why not be the bank and hold notes? You know, you can have real estate too, for sure. We do, but you know, notes are just, it's an untapped market. I mean, there's people who are involved in notes, but it's truly the niche of niches. Yeah.
I hear you. So how long have you guys been, at this? When did you guys first start your real estate investing business?
Really about 2007, just right prior to the crash and so forth. So we really got super motivated around 2009 when there were all kinds of deals available and started picking up things. And we did some alternative strategies that people weren't doing at that time. And we did well.
Yeah, we started out, we had rental property at first, and we got started with lease options, and that did really well for us. And in the process, we started actually creating small notes to go along with our lease options. Like say we wanted a $15,000 option consideration, we might have somebody who says, well, I've got $8,000, and we'd say, well, we want 15, so why don't we create a note for 7?
Yep.
So they were just small little notes, but it kind of introduced us to the idea of notes and cash flow. And what a great way to boost your monthly cash flow.
Exactly. And then, coming from my side, coming from Countrywide Home Loans, I didn't know at the time what was going on, but the great thing with notes is you're not actually having to worry about like a lot of the stuff that most investors have to worry about, especially if they own rentals and they have to worry about the tenants. You obviously have different sides that you have to worry about with notes, but most of these banks that are in it, it's all they're having is to hold on to is a piece of paper, and they're collecting money on that every single month. And you're secured against real estate. And a lot of people don't, I guess, understand the full scope of notes. So why don't we why don't we dive deep into why notes is such a, an option that people need to have in their tool bag. Like, this is definitely something that's key and vital. So why would you guys recommend like notes being, a tool in their tool bag?
Well, if you don't mind, just think about it. If you look at the skyline of any city, which buildings are the biggest, are the tallest? It's the banks, right?
Yeah.
I mean, we all know the big names. Well, yes, they do own some real estate, but that's not the business they're in, and they're trying very hard to get rid of that real estate. Why? Because they want to just have the notes. They want to have the income. And banks have done a really good job of training individuals to say, okay, we need to deposit our money with the banks, and then we can borrow money from the banks at a higher interest.
Right.
So that's why, I think people are a little apprehensive about notes, and they go, oh gosh, I could never do this. But, the reality is there's notes of every size, and particularly like in your area, Jason, like in the Midwest and the Southeast. I mean, out here, housing prices are insane, right? I mean, the average housing prices are like $750,000. It's pretty.
That is crazy.
You've got a lot of, really nice houses that are under 100,000. And, that means the mortgage on it might be 80, it might be 50, it might, and so they're more accessible numbers. And then you can hold those assets and not have to deal with tenants and toilets. If the toilet, backs up, you don't call Wells Fargo.
Right.
You call a plumber, and that's the beauty of being the bank. And,
right.
Liability is less, and you've got some things you got to be concerned about. But
once you've got a note set up, it's basically it's pretty much streamlined and easy to work with and so forth, because we use servicing companies all over that basically they manage our notes for us, and then they work with the borrower and they put the money in our bank accounts, and then we just kind of it's really kind of pretty easy process. And it's kind of funny because sometimes, it's like when a note goes bad, which, like say if we've got a non-performing that kind of goes bad for a while. There's also what we call impact investing as well, too, where if we've got the note at a discount, we're going to do something that the big banks aren't going to do or going to be able to do. And that's basically work with the borrower to make sure, that they stay in home. So there's really some good feelings that you get out of that too, as well, too. It's not just about the money. It's about the people. It's about the relationships. It's just about, and having fun too,
Yeah.
Yeah, absolutely.
When it's one-on-one, I mean, again, like Larry was mentioning, a bank, they just don't have the bandwidth to talk to people on a one-on-one basis. So if they have a situation, if there's a death in the family or divorce or a job loss or a medical issue, it's like, the person on the phone might care, but they're powerless to really do anything. And so, when we have that situation, we can work with them to help them get back on their feet, either through a forbearance or a loan modification, or if it turns out that it's really best for them to move on. I mean, they just don't have the financial wherewithal, or maybe they're just done with the house and they just, they got to move across the country or in with family, whatever. I mean, we have that capability to work with them and preserve their dignity and create a win-win.
It's crazy that, most of these large banks, unfortunately, they can't do the things that us small investors can do. Yeah. Like we've had, notes to where we just did a deed in lieu with them, and we didn't report it as settled for less than what's owed. We, being a smaller, individual, we could just report it as balance paid in full, and people don't understand or realize that helps them out immensely with getting their credit back on track and then being able to maybe buy again down the road. But it gives them such amazing opportunities. And, as just human beings, not even Americans, just being human beings, being able to help, each other out like that is huge. And that, that's one of the aspects that I really like about it too, is being the bank. You could really help these people out in a big way. But one of the things that I wanted to kind of shift to is Mike and I have been talking the past 2 podcast episodes on asset managers and bulk deals and all that kind of stuff. And I know there's several different ways that you can, you could create notes, you could buy notes, you could do a lot of different things with notes. So for this particular question and scenario, what if somebody is working with an asset manager? Maybe it's at a hedge fund, let's say, and they get a mixture of, notes and properties.
Sure.
What would be their first step on, let's just say they've got, two notes in zip codes that they're wanting to buy in. What would kind of be like their first steps? What would be their next, like their first and next steps with a note like that? It's a non-performing note.
So they've got the notes. So there's 2 notes involved. I just want to make sure I understand the scenario.
There's 2 first lien position on two different properties.
Yeah.
Sorry to not give you the full scope there.
That's okay. I just want to make sure.
We'd ask more questions.
We'd ask more questions.
Yeah.
Larry. Yeah. So, I mean, I guess one of the first things I do is, okay, we have it from a hedge fund. We know that they are the owner of that note, and I'd want to start, conducting due diligence. I'd want to find out, are there any other issues? Are there taxes that might be due? I'd want to check out the neighborhood. Now, again, this can be a virtual business. I don't have to necessarily go to that town to check it out. There's things like city data. There's, Google Maps and where you can drive the little Google car around the neighborhood, see what's going on. Develop relationships with realtors and say, hey, what's going on in your neighborhood? How are properties selling? How are properties renting? Because oftentimes, especially with lower price band notes, if you can acquire that asset, you might be able to, maybe they were paying, $400 a month as a mortgage payment. You might be able to get $1,200 a month as a rental.
Yeah.
So looking at those things, there's all kinds of services where you can have the property checked out, but here's the thing, that there's 3 major things that you want to look at: taxes, title, and blighted neighborhoods or blighted houses.
Yep.
So you want to look at the title, make sure there's proper chain of title. Most things can be fixed, but you better know what you're getting into.
Sure.
And then check the taxes. Most of the counties and cities have their data available online, but you can make a phone call as well. And then looking around at the neighborhood and find out, is it a stable neighborhood, or are people fleeing it in droves, or is it stable, and maybe building up? What's the job situation like? What are the rentals? What's the demographics of that area? So those would be the first things that I would look at.
And I guess it's almost like anybody, as far as like if they're doing a flip, they want to do what's the potential for my return on my investment for this thing. And, it's really, again, kind of just looking back at the numbers and how the numbers work and how am I going to make this work? And it's amazing, actually, in some areas with the notes, it's, they might be just a little bit in default for small things. And what is it going to take for me to pick this note up and get them back to performing again? And, actually it's like, with things like social media, you can find out a lot of things about people that they may just be in having a little bit of a slump, and it's not that big a deal.
Larry brings up a good point. One of the first things we probably want to find out is it occupied, and is it occupied by the owner? Right. Because if it's occupied by the owner, I guess one of the first things I'd want to find out is there a possibility we might be able to get them re-performing and get them paying again?
Right.
If they left the property, chances are that's not going to happen. But, so then you have your other exit strategies that you can look at.
No, absolutely. And, this kind of brings into the next set of, kind of what you would do next. Obviously across the country, numbers are going to be different as far as how much you would like to get, certain deals from. So let's just keep it simple. Let's just say Indiana. We're pretty stable state. We're seeing steady growth. It's nothing crazy. So let's just say we get these two notes. Let's just say they're both owner occupied, and they're both, one's 6 months behind, one's 9 months behind. And where do you guys typically want to be as far as like you buying it from like a UPB? And for folks that don't know what that is, it's unpaid principal balance. Do you guys go off of an unpaid principal balance, or what are you typically gauging what you want to try and get that non-performing note discounted at?
Well, that's certainly a factor. Unpaid principal balance. If they're living in the house, there's always that potential that we can get it reperforming.
Yeah.
What's the property worth?
Exactly.
That's a biggie.
Yeah.
And what can we acquire it at based on, if it's non-performing, the unpaid balance may or may not make a difference. So I want to know what's that house valued at. And because I might end up owning it.
Yeah.
So interest rate isn't really going to matter so much at this point if they're non-performing, but if we can get in there and start working with them. Sometimes we've talked to folks who, they might have, with a previous bank or something, they might have been trying to get a loan modification for a year or 2 or 3 even. And they're so grateful that somebody's actually talking to them.
Yeah, I know, right?
And it's just surprising sometimes. It's like, oh my gosh, you're a real person. You're actually willing to talk with me. Thank you.
I completely hear you. We've been in those scenarios before to where the homeowners are just, so like over the top excited that somebody's actually willing to not just talk to them, but willing to help them in their scenario. So
yes.
Let's just take one of these assets, for example, because, I'm sure some folks are wondering, well, what do I do? What do I do with this thing? How do I make money with it? Because a lot of folks that are probably listening, they're probably trying to figure out, how can I wholesale it and make money as quickly as possible? So let's just say we come to terms with the person that's 9 months behind. They're willing to do a deed in lieu.
Okay.
What would be the next steps from there if you guys were performing an exit strategy as far as like you're going to wholesale it? What would be our steps next?
Well, that's actually an easy one, especially if inventory is tight where you are.
Yeah.
There's a lot of investors they're just looking for properties and that reach out to your buyers list and it's probably going to be a pretty easy thing to do. If we were in a tighter market, or a more of a seller's market, our buyer's market, that might be a little bit different situation. But, I think just the regular avenues that a lot of people already use as far as going out to their list and
contacting their local RIA, actually even putting things up on social media, could be a way to dispose of an asset if you're wanting to quickly wholesale it. We had a note in St. Louis where basically we hadn't even got the note in our name yet, completely boarded yet. And we had an investor call us and say, "Hey, I want to buy your house." It's like, well, we don't actually own the house yet. He was rehabbing the house next door, and he says, "I want to buy that house and fix it up." It's like,
nice.
So long story short, once we actually got the note boarded, and we tried to get it performing again, and we couldn't, and so it was non-performing, and we foreclosed, and bang, we called up the guy and said, "Hey, do you want this house still?" And so it was a pretty easy sale, and we never saw the house, never, even had to do much as far as
that's
working
great.
on it.
Yeah.
Well, the cool thing with these notes is like you guys are in, upper Northwest. You don't even have to come and look at them. It's a complete virtual business. So with that same scenario, are you using your guys' own funds? Are you using like a private money lender's funds to first acquire the note? And then obviously for folks that don't understand, once you have that deed in lieu signed, you go to the county recorder, execute it, and then you become the actual owner of record on title. So once that's, why don't we talk about like the first transaction? Are you guys, because some of our folks are probably wondering like, whose money do I use if I don't have the money to take it down? Like, how are you guys structuring that side of it?
Yeah, that's a good question. And, and it changes all the time, right? I mean, sometimes you have way more deal flow than you have capital.
Right.
And sometimes you've got capital and you don't have deal flow. And so it's always a struggle, trying to find that balance.
Right.
So, if we have the capital, we'll take it down ourselves. If we don't have the capital, we use private money. If we kind of have something that's earmarked that we say, we want to kind of keep this money because we know this is coming down the pike, then we'll still use private money.
Right. Absolutely.
But, it just, it's always kind of a churning thing. We'll buy assets and then, turn them over and, make our capital back and reinvest. And, it just kind of goes on from there. But certainly having buyers, having private funds, or even, even institutional funds, if you can line that up. I mean, that's an awesome way because they're usually super low. But
well, there's also a very advanced strategy too, where basically if you have a note in your portfolio and you want to sell a partial of that note, and we do that all day long.
I'm actually getting ready to sell some right now. We've got some folks who are interested, so I can recoup on my capital. Yeah, that's pretty cool.
That's a really great strategy, and I know we're going to be doing another session with you guys here, which we could probably cover on our next podcast session with some more advanced strategies. So let me ask you this for some folks that may understand this. So you use private money. Let's just say you use private money. What are you using to give that private money lender peace of mind, their security in the asset? Because at this point, you're using their funds to secure and acquire the note. So you haven't done the deed in lieu yet. You haven't gotten it signed because you don't own it yet. So what are you giving to them is in order for them to feel comfortable with lending you the capital? Let's just say it's a brand new investor. They don't know Larry and Mariska. This is their first time dealing with you guys. How would it be approached?
Well, I guess I'd back up a little bit, and I'd want him to get to know Larry and Mariska.
Sure, absolutely.
To know them.
Well, let's say they do know you enough to where they're going to lend you some capital.
Yeah, but anyway, that was just kind of.
No, I know. Yeah.
Right.
But I mean, what I think some people don't understand or fully appreciate is that the note in and of itself is an asset and it has value. And so, you can assign your interest in a note as the lender. You can place the note in some sort of an entity, maybe an LLC, maybe a trust. They can be a member of that LLC or trust, so there's a lot of different ways you can, that you can add that security and, so that they know that they have a physical, maybe not a physical asset, not a real estate property because it is a note, but they have some actual, it's personal property, but it does have value. And
I love that because if folks that are listening to this right now, if you didn't just catch what was dropped, that was some huge golden nuggets, because most folks, why they don't execute on notes is because they don't really understand like how to properly structure deals with their private money lenders. And that was, if you didn't catch that,
I didn't even catch it.
No, it's great because a lot of folks don't know how to get deals structured with their private money lenders because they think private money lenders need to have some sort of a security, like a first lien position on a property. They need something from a security in the property. And catch me, and please correct me if I'm wrong here, but if we're picking up an asset, let's say the UPB on this example, the unpaid principal balance is $100,000. Let's say the value of the property is $120,000, and we're picking it up for, let's just say $40,000.
Sweet deal.
Even if we end up foreclosing, we're still going to come out just fine.
I mean, think about it. With those numbers, your investment to value is 30%.
Yeah. It makes complete sense.
Who gets their property for 30%?
Right. And I know that was like a crazy example.
It's not unheard of either.
Right. It's not. And that's the awesome thing with this business. And I know we're getting to the tail end, and we've covered quite quite a few things here. And guys that are listening right now, we're going to be coming back with another episode here. We haven't even really scratched the surface, but I know we've got the event obviously coming up here. And if you want to find out more about things that we're discussing as far as notes and bulk packages and all that kind of stuff, we've got a Facebook group. It's absolutely free. We're sharing great information in there. It's called Asset Manager Millions. So if you want to head on over there, request to join. Larry, Marishka's in there. I'm in there. Mike's in there. The whole team's in there. So I highly recommend you check it out. If you want more information on our event, as far as where it's going to be, it's going to be in Indianapolis, and it's going to be end of July. So July 26th, 27th, and 28th. And you can go ahead, email us. It's jluchesivip@gmail.com. And that's I'm sorry, I can't even spell my own last name. It's JLUCCHESI and then VIP@gmail.com. But Larry, Marishka, before we end it, why don't you kind of give people like a little bit of a taste what we're going to be going over at the event? I know we're just starting to put together all of our great slides and the agenda and all that good stuff, but just kind of like a little nugget. What are we planning on? What are you guys planning on sharing with our folks?
Well, I'm really excited as far as just the planning that we've been doing. It's just like, our sessions have been awesome. It's really exciting to be part of this group, and thank you for having us to be part of this group.
Absolutely.
And it's basically, gosh, everything from, where to find the money to what to do with the notes when you've got them, and just how to deal with the asset managers, and also I think, just basically talking to people again. I know some people have fear as far as how do I do this, and just, encouraging people just to do it and pick up the phone and trust in yourself, believe in yourself.
Yeah.
And know that you have a team here too. I mean, you've got some experienced folks here who have a lot to offer, but I think one of the things that I'm excited about sharing at the event is all the different exit strategies. I mean, we all know that you can wholesale a property, but you know what? When we pick up an asset, we typically look at not less than 6 different exit strategies. And, sometimes more.
That's so awesome. At the beginning of the show too, you were talking about cash flow, and we haven't even discussed cash flow yet. No. So if you want to have cash coming in from a recurring standpoint, our next week episode is going to be jam-packed. Because that's one of the big things. Once you guys agree, like, the calculator. I still have mine from the mortgage business, so right here.
Right. There you go.
Yeah, but the big thing is, I kind of got caught off guard there with the calculator stuff. But,
you're talking cash flow.
Yeah, no, the cash flow part is, it's great to wholesale properties. I'm sure we all could agree on that. But the longevity in the business is cash flow, having cash flow coming in every single month. Because what if you get sick? What if you actually want to take some time off and spend it with your family and know that that money is coming in regardless on if you're working on your business or not? I kind of find that to be the pretty cool part here is, you could create your business however you want. So
exactly.
Before we go ahead and wrap things up, do you guys have any parting words before we get it all set up? And then obviously we've got next week's episode that we're going to be covering even more stuff with you guys. So do you have any parting words?
Well, I guess I would just say I'm super excited about meeting everybody at the end of July there. So if you're not on board yet, you need to run and make that happen. But just to kind of play off what you were saying, cash flow. One thing that we all have in common is we all have the same amount of time in a day. We have 24 hours in a day, and we have 7 days in a week. And so what cash flow does for you is it buys you time.
Yep.
And so anyway, that's the thing I'm excited about. But yeah, I think you've got a really great group of folks here, and we're looking forward to sharing and all learning together.
No, I'm so excited that you guys are on the team. We've been having some amazing planning sessions, and I'm so excited for this upcoming event. It's going to be absolutely amazing. And again, if you guys would like to join us, shoot me an email. It's JLUCCHESIVIP@gmail.com and put in the subject line Indianapolis, and we'll respond back to you, give you some more details, and see if it's something that you would like to come and join us at. The seating is very limited, though. We're trying to keep this thing small. We don't want to have thousands of people here.
Right.
We want to keep it small to where myself, Larry, Mariska, Mike, other people of the team could help you out, because we know I've been to those larger events and you don't get any personal attention. This is going to be completely different. If you need to ask us a question, you could raise your hand and all that good stuff. You're not going to get caught up in, the hundreds or thousands of people at the other events. So I'm super excited for this. And again, if you have questions, let us know. But other than that, thanks for joining us. You will see Larry and Mariska on next week's episode.